This conference will now be recorded.
All right. All right. So I'm going to get started, and anyone who comes in late can just watch the replays. And some of the older members might not need today at all. But what I want to go through today is the part of the trade plan hacking framework that's actually the trade plan hacking framework. So when you guys sign up, and I'm trying to figure where to move my stuff because I want to be able to look at you. I don't want to have to look over here when I'm talking, but I'm gonna have to move things as I demonstrate things. But anyway, there are two tracks of learning with this mastermind, and it's really important that you keep these clear in your mind. One track is pretty obvious. It's learning a strategy. It could be Catapult Express or a Catapult Extreme, or Counterpunch Trader or Spotlight Master Suite. It could be one of your own strategies. It could be a hybrid or a blend of different ideas. It could be learning how to isolate a very specific pattern and getting really good at just that alone. That could become a strategy. It could be active fast strike. Any strategy that you can learn, it's like learning how to paint by numbers, right? You're just learning technique or learning scales on a piano. But just because you can play a scale doesn't make you a musician, does it? Just because you can paint by numbers doesn't make you an artist. But if you know the techniques and then you learn how to use it as an artist or as a musician playing scales inside of a musical piece, though the broader your vocabulary of technique that you learn in such a way just through repetition, the more you could express yourself and the better you can say what you want to say, whether you're doing it as an art piece or music or anything. But the same is true with trading. You can learn a strategy and you can learn the techniques of a strategy and you can start trading it tomorrow, and chances are you'll lose all your money. Because just because you know a strategy doesn't make you a good trader. And this is where the disconnect occurs with most people who keep buying strategies but never succeeding. The strategy's supposed to work. I paid so much for your strategy and I started trading it tomorrow and I lost my money, et cetera, et cetera. Just like the very first day when I started calling a live trade room 18 plus years ago, and I was scared shitless because I didn't, I'd never done it before, and I got the four magic words: lean on the system. Well, those four magic words are the clue to what the next track of learning is. And this usually goes over people's heads. They don't get it, or they're smart enough to understand it and they shake their head yes, and then they move on and don't apply that. That's what most people do. Most people lose. So we don't want to do what most people do. The second track of learning then is what I call the trade plan hacking framework. It's where you learn how to be a successful trader. And at some point, those two tracks of learning, your techniques that you're learning with a strategy or a way of trading, learning how to trade successfully and what it takes, which is all about what we're going to be talking about today. But at some point, they come together into one track because eventually you marry your techniques with your everything you've learned about what it takes to succeed. And that's what the trade plan hacking framework is all about. It's teaching you what it takes to succeed. It's designed to put you in the strongest, most advantageous position you can be to succeed as a trader. Some people get it right away. Some people have a real hard time with it. And that's why we always talk about person trying to trade, the transformative process to becoming a CEO of your trading business, where you're from a much higher point of view when you're making trading decisions. The other way I always say it is above the forest versus in the trees. So every trade is like a tree in your forest, right? And some trees fall, which is okay if it means the forest will grow larger as a result. The forest, that's the value in your account. That's your overall value. The equity in your account is what we want to grow. And some trees fall, some trades lose. So The winning trader understands that. The winning trader realizes that it's a numbers game, that there are, some trades will lose, some trades will win, as long as you win more and lose less. And if you go 2 steps forward, 1 step back, 2 steps forward, 1 step back, that'll get you to your financial dreams, because that's your equity curve, the stair stepping that goes up and down, up and down. As long as it's going up, that's how you make money. That's what making money is as a trader. But that has nothing to do with necessarily a strategy, because a good trader can make a lot of money with a mediocre strategy. But a really bad trader, someone who doesn't know what we're going to be talking about today, could lose money with an excellent strategy. You see, there's an irony there. So we want to avoid all that. That's why this training today is so critical. And so I'm going to start from the beginning, but first I want to show you a few things. I've updated the member site a little bit, and there's a couple things I want to point out to you. So let me share my screen, and then we'll get into what this trade plan hacking framework, what it is, what it means, and what you should be doing going forwards from this day forward. All right, let me just share this. Let me know when you guys can see it. You guys see it now? You see the screen I'm sharing, right? Okay, good. All right, well, this is the member site. You all know how to get into the member site? Is there anyone in here who doesn't know how to get into the member site? And Heather, I know you might be having sound issues. Don't worry, this is being recorded. So y'all know how to get into the member site, right? If you don't know how, you can unmute your mic. You can let me know. Also, open up the chat. I forgot to open mine. There's a little icon. You want to open the chat in case you want to type in a message. All right, so there's a couple important things I want to show you in here. First of all, if you're brand new, brand spanking new, go through all the material. Go through the welcome. There's some useful stuff. Here you would, in the welcome areas where you would find the TradeStation offer. This is how you sign up for TradeStation. If you want to get the commission rebate and get the platform free for life, use this link to sign up. Promotion code, talk to this man, Eric. Okay. You also need to get data. So make sure you get the best bundled data deal that they offer for day traders. Data should include, you might want to write these things down, but if you're going to be day trading, you're probably going to want the NYMEX. That's the New York Mercantile Exchange. That's for energies, crude oil, unleaded gas, natural gas, heating oil. You're going to want the CME. That's the Chicago Mercantile Exchange, and that's where you're going to have most of your E-minis. S&P E-mini, which is the ES, NASDAQ E-mini, which is the NQ, the Russell E-mini, which is the RTY. The Dow E-mini, the YM, is on the Chicago Board of Trade. That's the CBOT. That's another one you're going to want. That also comes with grains. So you can also get soybeans, for example, which is a great day trading market. Anyway, these should all be bundled together. Another one that you might be interested in is the COMEX. COMEX is where you have gold futures, maybe some of the other metals. And then also on the CME, I forgot to mention, that's where a lot of the currency futures, actually, that's where the currency futures trade. So you can trade currencies in Forex. Forex is a spot market. Spot means cash market. But you could also trade futures contracts, which is like a commodity. It's a different market for trading, and there's pros and cons of each. But you might be interested in looking at some currency futures, perhaps. A lot depends on where you're at in the world, what time you want to trade and stuff. All right, but those are pretty much the data feeds you need. But you also want the NYSE, the New York Stock Exchange, because you want to get the data, and the NASDAQ. You want to get stock and equities data. And then you want Forex. Forex TradeStation gives you for free. All brokers give you Forex data for free. The other markets cost money, but it's gotten less and less, and it's very inexpensive. And sometimes you can even get it for no charge. I don't know what they charge these days, because TradeStation provides me data for free. They've been giving me free data for almost 20 years. So unfortunately, I don't know what you guys have to pay to get data, but you're going to need it. So make sure you get it. Okay. The thing that we're going to talk about today is over here in tools and resources. right up here is the trade plan hacking framework model. And I just added this, a new piece to it, this download link here. And I'll show you why. Well, the first one is this. And you guys have seen this, right? Because we looked at it a number of times. If you haven't seen it, this is a model where you have your steps. And in each step, each big step, there's a bunch of little steps, but it can be different for everybody. Some things are universal. The whole deciding, well, you made the big decision to join. That was a big decision. But you have other decisions to make too. This is what we call step one. Now, this is what was already on there. This is more like a model that you guys can use as an example. So what I did was I made you an actual blank framework like this. This is what you should start with. And I put these other things lower, which you could refer to these, but really you're going to want to be putting your own things in here because some of you are going to be working on different things. You're not all doing the same stuff, but the steps are the same. So the idea is you don't go from one step to the next until you're ready. So you have to finish one of the steps, which again could have a bunch of smaller steps, before you go to the next step. So you want to think in terms of what are all the decisions that you need to make? Well, first of all, you go through your self-evaluation, and that's where you decide what you are going to trade. But you might not know what you're going to trade because you're going through this process. So sometimes it's easy to start with what you're not going to trade and then see what's remaining through process of elimination. All right, I'm getting a little bit ahead of myself. So before we get into this, this is the actual framework we're going to be talking about in great detail today, because this is literally your blueprint or your roadmap. Okay. One big concept to know if you're ready to go to the next step is that you have to judge yourself by your actions. Like, it's one thing to understand this and know the things you need to do, but it's another thing to actually do those things and to accomplish them and then move on. And that's your earning the rites of passage. And you need to be very clear on using that concept of earning the rites of passage, because we're all smart enough to think about it and understand, okay, we have to do this. And you go, okay, I agree. I have to believe in what I'm doing. I have to build a foundation and believe of what I'm doing. Okay, well, here's a trade plan and I can see it's done really well. I believe I'm going to go to the next step. But you only know if you believe if you do the things that are, if your actions are congruent with your beliefs. And so you have to judge yourself by your actions. If you're not doing certain things and you know you should be, that's an indication that you're moving too fast and you got to go back. Okay, so you'll understand that as we go. I'm talking in big picture concepts right now. So the other thing I've added to the member site is very important, and this is actually on all the member sites. It's not just on, where'd I go? Where'd my thing go? What did I do with it? It's not just on, shoot, did I close it? Hold on, guys, sorry about that. No, it's not there. I was looking for the member site again. Where'd it go? Too many things open. Hold on. Well, I'll show you this, and I'll show you where it is. The no-brainer guide to trading success. This ebook. I put this ebook on the CEO Trader Mastermind member site. Now, this is on all the strategy member sites. It's on Catapult. It's on Counterpunch. It's so important. But a lot of people overlook this. And this is before my company became Backpack Trader, by the way. This is right when I left NetPicks. My new company was called NetPicks Trading, not NetPicks. Anyway, I'm going to rebrand this, but the content will remain the same. This should become your trading Bible. This is literally in book form what the steps are that you need to follow with same time. This framework. This framework is a visual model that you can use and build your steps with and all the decisions that you need to make underneath each of those steps. I gave you a clean one, but this is the reference that you should be following in book form. So if you're following what this says and you're using that framework, that tool as a just a working model for you to keep you on track, you're going to be in a really good position to progress properly. So you want to read this book, make sure you understand it, and follow each step. And don't move to the next step until you're ready. Does everyone understand that? Are there any questions about that? So while we're doing that, let me find the stupid member site that I must have closed by accident. All right. So in tools and resources, I put it right here for you. The no-brainer trading success guide. You want to click on it, download it. Whether you print it or not is up to you, but definitely you want to refer to it and follow it, because this is really what we're doing. This is what the trade plan hacking framework is. And then, of course, your 12 Powers to Successful Trading is the other ebook that I recommend you download. And the reason why is because the concepts inside of the 12 Powers are, they're built into my strategies, but I want it to be built into your own knowledge also. That's something that would be really good for you to know what all those steps are, because we're literally adhering to them. I mean, the 12th step is called CEO. Be the CEO. The power of the CEO. Be the CEO of your trading business is what we're all trying to become. It's one of the 12 powers. There's a reason why. Okay, so is everyone clear on that so far? So now let's get to the framework. So this is literally the model, but I gave you guys a working copy for yourselves, and it's on Excel right here. So let's talk about the steps, like big overview, general, big picture, so you understand the pathway we're going to go on. And then we could break down each step into the smaller sections and the smaller steps that are included. Okay. So the first one is decision. And decision is really important because that's where you're going to make basically the choices that you're going to be working on over the next several months or however long it takes. And one of them, of course, is figuring out what to trade. You have to think about all the relevant things and write them down. When you can trade, when you can't trade, maybe when you don't want to trade, maybe when you do want to trade, you want to swing trade, you want to day trade, you want to do both. How much capital do you have, or how much capital do you anticipate having when you're ready to start trading live? Is it $5,000? Is it $20,000? Is it $2,000? Right? It's all relative. I'll tell you this, if you can't make money with a $100,000 account, or let me say this again, if you can't make money with a $2,000 account, what makes you think you can make money with a $100,000 account, right? So starting small might be a really good idea, but this is where you make those kind of decisions, okay? Deciding what to trade is in the end, there's going to be a small handful of choices if you're going to day trade. It's probably going to be one of the E-minis. Does everyone know what those are? Does anyone here not know what the E-minis are? I know some of you. Okay, Josh, good. So the E-minis are stock indexes. You've all heard of the S&P 500, right? All right, good. I'm glad. Look, if you hear me say things and you don't understand what I'm saying, don't be shy. Ask. Okay? Just because it's the only way you're going to learn. I know some of you aren't used to the jargon. I use a lot of acronyms, a lot of abbreviations. When I say counterpunch trader, I say CPT. When I say CEO Trader Mastermind, which is what this program is, I say CTM, right? CEO Trader Mastermind, CTM. We use a lot of acronyms. UTA, Ultimate Trade Analyzer. That's the spreadsheet we use for logging our trades and building a trade plan. So if you hear an acronym that you don't know, write it down and then ask. It's the only way you're going to pick up on these things, right? You don't have to learn all the jargon all at once, but whenever you hear something you don't know what it is, it's up to you to ask me about it. So if you don't know what an E-mini is, fine. An E-mini is an electronically traded futures contract. When we trade futures, we're trading a contract that's um, a standardized amount of something. So an easy one to understand is a crude oil futures contract. It's 1,000 barrels of light sweet crude oil, which is a standardized version of crude oil. It's a type of crude oil, a certain quality of crude oil, and all the barrels are the same size. And one contract is 1,000 barrels. So when the price of crude oil goes up or down, the contract is being priced on 1,000 barrels. So if it's what was crude oil today, you guys? Do you remember? I forgot to. So busy, I didn't look.
Maybe in the 80s.
What's that?
I think it was in the 80s.
I'll tell you right now. Okay, actually, I need to. We're not in H anymore, right? Aren't we in K now? We're in May, aren't we? We in the May contract? CLK. Yeah, it depends on the contract. So let's look at a contract of crude oil and I'll explain how futures work. Some contracts are quarterly. They expire every quarter. Crude oil and the energies are monthly, every month. And so we're currently in the May contract because on the 17th of this month, 3 days ago, which was Friday, that was the last day we should be trading the April contract. So usually it's the 17th of
67.
the month is when you is the last day of the contract, the front month contract, and then the 18th is when we start trading the new one. So we're in March right now. We're in March. We just the April contract we stopped trading on Friday, and this Monday today is when we start trading the May contract. So it goes middle of the month to middle of the month, basically. So what that means is that as the price goes, by the way, it's $67.75 per barrel, but a contract is 1,000 barrels. And the only thing you really need to know is that every penny that this goes up and down is $10 of value. It's 1 penny times 1,000 contracts, or 1,000 barrels, I mean. So that's $10, right? 1,000 pennies is $10. So every penny is $10. So if crude oil goes up 20 cents and you bought a contract, then your contract is now worth $200 more than what you bought it for. And now you can sell it and make that $200 profit. And it's as simple as pushing a button. It just instantly you're in, instantly you're out, and you're trading these contracts just like it was a stock. But it's not a stock, it's a contract. You don't want to hold the contract to expiration because you don't want to receive 1,000 barrels of crude oil on your doorstep. What if you're trading multiple contracts? If you're trading 5 contracts, that's $50 for every penny that the price fluctuates, right? It's $10 per penny or per tick. It's another word for tick per contract. All right. That's what a crude oil contract is. Now, all futures contracts are different. So, for example, unleaded gas is $4.20 a tick, and it's a whole dollar's worth of price action is worth $42,500. It literally trades in 1/10,000th of a penny. 1/10,000th of a penny. That's unleaded gas. So when we think about the E-minis, it's a very similar thing, but it's not a physical commodity like crude oil. It's a certain amount of shares. So like the S&P 500, I think one contract's probably 100,000 dollars, and I don't even know what it is. You can look it up. You can go to the CME and you can get all the contract specs if you're interested in that sort of thing. I'm not interested in that sort of thing. What I'm interested in is just how much I need to trade it, what I'm risking, what I stand to make, what the value is per tick. A tick is a minimum price movement. So these are all basic things you're going to learn. And as you hear us talk more and more about it, you hear something you don't know, write it down, ask the question. All right. So I'm showing you crude oil just because it was easy to explain. It's 1,000 barrels as one contract. But a futures contract is what we're trading when we're day trading. And they always have a start time and then an end time. And then you go to the next contract. So the E-minis trade every quarter. Every contract we're changing it quarterly. We just went to the June contract. Like literally, we finished the March contract. The last day was the second Thursday of March, March 9th. On March 10th, we started trading the June contract, and we'll be trading the June contract until the second Thursday in June. And then on the second Friday in June, we'll trade the September, the next quarterly contract, okay? And so that's what trading futures is we're trading contracts. And if you buy a contract, if you're going long, you want the market to go up, right? If it goes up and then you sell it, you make money. If you buy it, but then it goes down in price and you sell it, you lose money. Now, what if we want to go down? You can go down or up. If you go down, it's called selling short. You sell the contract, you go short, and then if the price goes down, then you buy it back at the lower price, and the difference is your profit. So let's say you sell a contract of crude oil and you never get out of the trade. Let's say you hold it all the way to expiration. Now you're responsible for delivering that 1,000 barrels of light sweet crude oil to whoever owns the contract when it expires, you see? So we don't want to be in the contracts when they're expiring. And that's why we use these for day trading only. Here's the thing, the broker is not going to even let you do that. They're going to get you out of the trade regardless. And you may get out with a big loss if you're not careful. So we don't want that to happen either. So when we place a trade, we already know where we're going to be getting out. We don't get into a trade until we know when we're getting out of a trade. Every single time. The whole trade's planned before we take the trade. Josh saying, how many contracts are created? Boy, you know what? I don't think there's a limit. Usually you see up here on TradeStation, it shows you volume. Like so far, there's been, the market's just still, is it open yet? I don't even know. It's still closed actually, but maybe it's open. It's only 1,269 contracts so far today, but usually there's like 500,000 or whatever, hundreds of thousands a day. So that's a good question because some markets are thinner. Some markets have lower volume. Like unleaded gas is one of those markets. It has low volume. Just to look, I want to see what the April contract looks like. This is the one you shouldn't be in anymore. So look, this only has 28 contracts. The other one has 1,200 and something contracts. But if you looked at this last week, this would have been hundreds of thousands. And also we're looking at it in the evening. You want to see the volume in the day. Now there's another way you can look at volume is you could put on a daily chart and just look at one bar per day, and then you could put a volume indicator and you could see the volume per day. Okay, there's different ways to see volume. Question, is back testing futures done the same way as other trading? Kind of. It's harder with automation. It's a lot harder with automation because with automation, you can only test the contract. They have a thing called a continuous chart, which blends and merges a bunch of contracts together into one big chart. So with crude oil, you might have 6 different contracts. Remember, it's only 1 month each. You could look 6 months back, for example, on a continuous chart, but it's not perfect because the price of a January of an April contract and the price of a May contract are not always the same, and there's gaps between the closing of one and the opening of another. And so the continuous contract will smooth those gaps by changing the price. There's a formula. All the prices in the past are not even the actual prices that the commodity traded at. The patterns are the same. The price patterns are the same, but the actual price levels are not what really happened. So a continuous contract is good for figuring out price patterns, and if a trade will have a lot of winning trades, but it's at prices that never existed. So there's a flaw with using a continuous chart. So we use it to get big picture questions answered. And I kind of went over that in the boot camp a couple days ago that we did the Catapult Extreme Trade Assist boot camp. But we focus mostly on equities. So when you're using automation on a stock chart, well, that's just one long continuous chart, right? That's not a contract that starts and expires and then goes to another one and another one, like futures. So futures are unique. So futures have unique challenges for sure. It's a little bit different when it comes to back testing. So the reason I'm kind of explaining this all to you now is because I'm just trying to get you to understand that a futures contract is a unique type of thing that we trade. It's got a lot of advantages. It's very inexpensive commission-wise, getting in and getting out. It's like $1 in, $1 out, sometimes less. There's a few dollars in exchange fees that get assessed as well, but you can get in and out really fast. And if you're trading a liquid market, which is what we focus on, you're in instantly and you're out instantly, and it's a great way to day trade. And we want to choose active markets that move a lot. Crude oil happens to be one that moves a lot. It's a great one. All the E-minis, you didn't know what an E-mini is? There's 4 that we're concerned with. The S&P E-mini, that symbol is ES. You can write that down if you don't know. You're going to hear it a lot. A lot of times we'll just say the ES, and you'll go, "What's that?" Well, it's the S&P E-mini. The Dow E-mini is the YM. I don't know why it's YM, but that's its symbol, YM, Dow E-mini. Okay. Then there's the NASDAQ E-mini. That's NQ. And then finally the Russell E-mini. A lot of us love to trade the Russell. The Russell's a good market to trade. RTY. All 4 are good. The ES is probably the hardest, the S&P. But I think between the Dow E-mini, the NASDAQ E-mini, and the Russell E-mini, those might be really good choices for you guys to start with. And another reason why we like the E-minis even more so now than ever before is because now they have, and this is relatively new over the last year or two, micro versions of the contract. A micro is 1/10 the size. So let's look at the RTY. Let's look at the Russell E-mini. Okay, this is a look at Catapult Extreme, and this is the micro version of the Russell E-mini. It's called the M2K. 2K, I guess, is 2000. The Russell 2000. This is the micro. It's 1/10 the size. So the Russell E-mini usually trades at $50 per point, $10 a tick, which means each point is divided into tenths. A minimum movement is 1 tick. So there's 10 ticks to a point. It's $5 a tick. But the micro is 1/10 the size. So instead of $50 a point, it's only $5 a point. And each tick is only 50 cents. So if you normally would need, say, 10,000, maybe 7,500 to $10,000 to safely trade the Russell E-mini, you need 1/10 that to trade the micro. So if you don't have $10,000 and you only have $1,000, it's probably not enough still, but you might be able to make it work trading a micro. Remember, one of the things we always want to do is only risk 2% of our trading capital on any trade. on a trade plan trade, a proven trade that's part of a proven trade plan. And so the way we figure that out is from the entry to the stop. So if this particular trade was setting up on the right edge of the chart, and if you were in the catapult boot camps, you'd recognize what this is. And if not, you could, no worries. This is the other track. This is the technique track, not the trade plan hacking framework track. But I'm pointing this out to you so you understand how this works. The risk is going to be the entry, which is that little plus sign, to the stop. And in this case, it tells you the risk is 1.9. So that's 1.9 points, or 19 ticks, because there's one tick, there's 10 ticks to a point. So 19 ticks, if it was the full size contract, that would be 19 times 5, right? So you'd be risking $95 a contract. But on the micro, you're only risking $9.50 per micro contract. So that obviously you can trade with a much smaller amount of money in your trading account. It might take you longer to build it up, but like I always say, if you can't make money with a small account, you're not going to make money with a large account. All right, so I just want you to understand that when you're building a trade plan, money management is a very important part of that trade plan. How much you're going to risk per trade. We normally say 2% is the right amount. But what if you have a trade plan that wins quite a bit more than most? And what if it's a certain amount of money that isn't quite as important to you? Because if you were to lose it all, you'd wake up tomorrow and your life would still be the same. It wouldn't have changed. It wouldn't have hurt you that badly. You might make the executive decision to trade with 2.5% or 3%. I know some people that trade as much as 5%. That's very risky, because what if you get 3 or 4 losses in a row? Well, that's a problem if you're risking 5%. It's hard to overcome that. So when we talk about money management, we'll probably do another session. There's one thing I would recommend is that you first be really conservative as you're learning, and you try to build up a buffer. So let's say you're starting with $10,000 and you have a really great trading plan. It wins more than usual, and your average net profit per trade is higher than the $50 that we kind of use as our model. Maybe it's 60 or 70. Maybe you've got this just really great trade plan. You're really thrilled about it, and you can afford to risk more than 2%. What you can do is, just once you've gotten to that point in the framework where you're now ready to risk your full 2%, that's a certain step down the road there that we'll talk about. But maybe what you do is you say, okay, I'm going to do that, but when I build my account from $10,000 to $12,000, when I'm above that buffer, I'm going to now go to a 3% risk. But if I get down into that buffer, if I lose some money, then I'm going to drop down to a 1.5% risk until I build it back up again. You see what I mean? So if you give yourself a buffer, maybe you've given yourself a reward that anything above that, you go with a little more risk. Because just adding 0.5% could make a huge difference as it compounds 2 or 3 years down the road. It could be hundreds of thousands of dollars of difference. So risking a little more is not always a bad decision. You just have to do it with, it has to be well thought out with good intentions and stuff. Monty, you have a question?
Yeah, this reminds me back maybe a year ago, you were looking at a UTA sheet for chiffon. He had a
Yeah.
pretty good plan. He had 10,000 and made 18,000 his first year. I said, pretty good. But then Troy showed him to move from 2% to 3, and it went through the roof. What,
Yeah, it was like
300,000?
100,000. Yeah.
Yeah,
And I don't know that he made that. That's what the trade plan would have produced that he tested. I'm not sure that he literally traded all that and made that. That's just the trade plan that he was building. And this is the type of thing that you guys are going to be working on and building, the same technique. And if you guys haven't seen that video, I could show it to you. I have it. You guys can see it anytime, and you learn a lot from that, actually, what Monty just brought up. But just a 0.5% difference on what you risk could be a huge difference down the road. But it could also be a huge difference on what you lose. So it can hurt you. It's a double-edged sword, right? So that's why we want to use risk as a tool to help us make more money, but we have to be very careful that that same amount of risk doesn't hurt us. That's why I say if you build a buffer, I love that buffer idea, because as long as you have that buffer, once you get to that goal where you've got a nice buffer from your starting capital, you got a little bit of profit, and then anything above that now, use that as your watermark to where maybe you could put a little more risk on the trade. And that's only if your trade plan warrants it, if it deserves it. All right, so speaking of trade plans, let's go back to the framework now. Does anyone have any more questions though, as far as e-minis and contracts? And I'm gonna leave it up to you to figure out the specs, or if you have any questions, feel free to ask. But I don't want to spend today teaching you all the stuff you can just Google and find out in like 3 seconds. It's not the best use of our time today. The best use of our time today is going through this. This is your second track of learning. This is your trade plan hacking framework. This is your roadmap to get you from where you are now, person trying to trade, to where you want to be in the end, CEO of your trading business. That's what this is the model of. And so you're on this first step, deciding, and you're trying to decide what to trade. And there's a lot of steps that we're going to use to figure out what you should trade. And while you're going through that process, you're going to be learning so much. It's easy for me to say, oh, just trade this. But that's going to be a big disservice for you, because then you'll start with that, but you're not going to learn the things I need you to learn to be successful. What this is designed to do is to build a foundation for yourself. I call it the trader foundation. And it's not something you could talk yourself into. A foundation is something you acquire with the work that we're going to do in this framework. And foundation, as far as to keep it really simple, it's synonymous to belief. When you build a foundation, what the main goal is building your belief in what you're going to trade. If you believe in what you're trading is going to make you money and grow your forest despite some trees falling, then your chances of success skyrocket. If you don't believe in it, then you fall victim to what traps everybody that fails. You end up chasing performance. You wait till the trades look good, you've seen some winners, and then you jump in, and then right at the end of the 2 steps forward is usually when that happens, and then you start trading at the beginning of the 1 step back, and right when you've had more pain than you can handle, you quit, you throw the baby out with the bathwater, you run for the hills, and then you miss the next 2 steps forward, and then rinse and repeat over and over and over. That's what most people do. That's what I'm trying to get you to not do. And the reason why they do that is because they haven't built their foundation of belief. You see, the foundation of belief is the most important thing. If you don't have that, you're not going to succeed. And you can't just shake your head yes and say, I believe, because you're going to find really quickly that you don't when you're in a trade and it's going against you. You're going to do everything you can to stop the pain, because that's what humans do. It's a threat to our survival. We're going to run away from something that threatens our survival on a very primal level. That's why most people fail. Human beings are not wired to be good traders. We have to evolve into it, become that through acquiring certain understandings. And the biggest thing of all is believing. And you can't believe in something unless you go through the specific steps to prove it to yourself first. So when we look at this framework here, foundation and proof, this is interchangeable. I mean, I don't know what comes first, the chicken or the egg, but they're both super important. You can't have a foundation if you don't prove it to yourself, but if you don't prove it to yourself, you can't have a foundation. Guys with me so far? So let's say that you figured out, okay, knowing me the way I know myself, I believe I could show up to do my business at the same time at 8:30 Central Standard Time, Monday through Friday, but at 9:45, an hour and 15 minutes, I have to be out the door to get to my job. for example, let's just say. That's part of what you discover with the self-evaluation. You figure that out. Okay, but let's say you've really thought it through and you're comfortable with being able to trade an hour a day, every now and then a few minutes beyond, but quite often you'll be finished much sooner. Like you might be finished in the first 7 minutes, but then tomorrow might take 47 minutes. But you could do that and you figure out that your trade plan is 99.9% of the time going to be finished within that hour or sooner, and that you can do that as a trade plan business Monday through Friday. Does everyone feel like that's a pretty reasonable thing to commit to? Lori says, are there all time frames to trade? Look, as you start trading at night and off hours and in the pre-market or in the afternoon or whatever, you could probably come up with a trade plan that will work, but it'll just require more patience and you're just going to have to flesh it out. It's like Chiffon's trade plan that Monty just mentioned a little while ago. Well, he had to leave for work at, I think, 6 a.m. or something like that. So his trade plan was literally 2 hours prior. He's on the West Coast like me. So that would mean, at 6 a.m., which is 9 a.m. New York time, he's out the door. The market doesn't even open until 9:30. So before the market even opens, he's driving to work. So he made a trade plan starting in the pre-market at 4 a.m. our time. It was the NASDAQ E-mini, which trades out of Chicago. So we always think in terms of exchange time. So we want to know where the exchange is, and that's the time that we think of. So if he's here at 4 a.m. in the West Coast, that means he could start trading at 6 a.m. exchange time. So that's 2.5 hours before the markets officially open. So he had to find a market that was active at that time. And the NQ, the NASDAQ, is one of those markets that's kind of active all the time, even at night. It's just active. It's always active. It's more active in the day, but it's still active enough in the pre-market. So he created a trade plan. It wasn't the greatest trade plan in the world. It might even fallen in the mediocre category, but it's the best that he could do during a time when he can trade. And it was good enough to be able to make a lot of money, as Monty just pointed out, when you start applying money management. Okay, so he had a plan that worked for his schedule. Everyone's different. That's the thing. If you're in Europe, you might want to trade the DAX futures, and that's going to be 2 a.m. New York time, 11 p.m. West Coast time, but it's 9 o'clock in the morning in Germany, and that's maybe perfect for someone over there. DAX futures, it's a great market to trade. So it just depends. That's why this is such an important column, the deciding column. And if you still are not sure, figure out all the things you don't want to do or can't do. Like that's what you want to do with use this or even create a Word document that goes with each column. Use this to get organized in any way you can. But this is the framework that you're going to use to craft your roadmap to get to that CEO trader status. Okay, and when you're on the first step, this is where you figure out your starting steps, what you're going to end up trading. So I said a while ago that most of you will end up trading an E-mini and maybe crude oil, because those 5 contracts, those 5 markets, another word for symbol, like I refer to a market, crude oil, that's a market. The Russell E-mini, that's a market, right? The Euro USD Forex pair, that's a market. Apple Computer stock, that's a market. Okay, they're all different markets. Every symbol is its own market. So think like that. So what's the 5 that I mentioned, the 4 E-minis and crude oil futures, all 5 of those markets have a micro contract that has enough volume that you can literally trade it. So crude oil takes a little more money to trade that, but it's a great market to trade. If you can't afford a full contract, well, the micros are 1/10 the size. So instead of $10 a tick, it's $1 a tick. Instead of $1,000 for 100 barrels, or $1,000 a contract for 1,000 barrels. That's $1. $1 of crude oil is $1,000 in value, right? With a full contract. But with a micro contract, it's only $100. It's 1/10 the size. So those five are probably going to be where you're going to focus on the most in most cases. Most of you are going to focus on those. One of the E-minis and crude oil. Maybe unleaded gas, maybe some of the other markets might also be appropriate, but that's something that you'll have to figure out in this getting started section. And you don't have to know everything perfectly, because when you get to the next step, learning the strategy, learning the basics of a strategy, that other track of learning, from that we can figure out then how we're going to prove it to ourselves. So once you figure out when you can trade and what markets you might be trading or considering trading, we'll just jump to the chase and figure it's going to be one of the 4 E-minis or crude oil futures for day traders. Probably you'll all end up choosing one of those. Some of you might like the YM, some of you might like the RTY, you might want to maybe try both, whatever. Then you got to figure out, well, what strategy should you start learning first? And you got 3 of my best strategies, but I only want you learning one at a time. And we're on the Catapult Extreme right now, and that's the easiest one to learn. So I'm going to recommend that's what you start with. It doesn't mean that you'll end up settling in, because another thing that you have to acquire over time, and there's no way to know this until you start trading, and it may change in 6 months from now, but your own personal style is something that you also acquire. You don't have to know what it is right away. Nobody does. But you'll learn what it is. The more you learn about trading and the more you learn about the trade plans you're starting to work on creating and start practicing trading and learning new techniques and stuff, your style will probably change as you evolve as a trader. So some of you might start learning Catapult Extreme, but by the time we get back to Spotlight Master Suite, which we'll do next, or after that, Counterpunch Trader, which we did already, by the way, before you guys joined, we did Counterpunch Trader, but we'll come back around to it. Maybe one of those strategies you like more. So you guys can learn the strategies at your own pace. And some of you are going to just be like sponges and soak them all up and learn them all and just really get into it. And some of you might not be so quick and they're like, well, I think I'm just going to master the one and not get to the other one until I've mastered this one, which is fine. I mean, everyone's different. This is designed for you to all go at your own pace. So I have enabled for you the membership sites so that you can go to any of the strategy membership sites and start learning with the pre-recorded videos that explain the strategy. I've done all those are there for you. But right now, as a group, together, we're doing Catapult. Okay. So have you all, if you haven't seen the other membership sites, you should let me know. It's possible that I need to enable some of them for you. And I'm trying not to do them all at once because I don't want to fire hose you guys. But when you look at the membership portal, there's all these different possible member sites, right? But the ones that you have in the mastermind, Catapult Extreme, and then the others are going to be Counterpunch Trader. And I always give you Counterpunch Express because that's got really good training for learning Counterpunch Trader. You start with Counterpunch Express, and then the Spotlight, Power Trader, and Master Suite. Those are the 3 main ones that we'll be focusing on. All right. So if you don't have those enabled yet, you could let me know. But the Catapult Extreme is where we're at right now as a group. So that's what this is. When you finally figured out this stuff on the left, then you're going to start learning a strategy. You're going to learn with one, begin with one. You'll learn the basics, start using it, start practicing placing trades or whatever, but don't trade with real money. Whatever you do, don't do that. When you're ready to trade with real money is when you are basically here, the last step, CEO. and you're gonna get there incrementally. So I'm going to quickly walk you through what this is. Okay, I know I'm getting into detail, and we're going to get a little bit in the weeds if I break them all, into great detail today. But that's why you have this no-brainer guide. Use that for the details. Okay, so the way it works is you figure out when you can trade, and then you're going to figure out a strategy that you're going to start with, and we're going to start with Catapult Extreme. Then you're going to start working on trade plan ideas, and that's where we incorporate things like the 3-step sniff test, where we learn how to assess a chart to see if it's a possible candidate for a trade plan. And the 3-step sniff test, is there anyone in here that doesn't know what that is? Anybody? Well, you guys are good. I'm going to assume you all know then. Monty?
Yeah. Where do I run that? Do I
Where do
run
you?
it on Live Trade, on Sim? Probably not. Or
Nothing's
off?
on live trading. And the three
Okay.
step sniff test is not something you run. Those are 3 steps that you do. And
Yeah.
there's the reason why it's called a sniff test. You're not sniffing anything, but the idea is that if it looks like a duck, it walks like a duck, it talks like a duck, then it's probably not an aardvark. It's a duck, right? So if a chart looks like this and smells like this and walks like this, it's probably pretty good. And so we do 3 simple tests to
Uh,
determine, right?
how about back testing?
Well, that comes next. So
Oh, okay. I'll wait.
yeah, you're skipping steps. Back
Yeah.
testing is very time consuming, so we do the 3-step sniff test as a way of economizing our time and identifying the most potential candidates before we invest our time into back testing. So we want to back test the things that indicate that they've got great potential, because there's nothing. I mean, let's face it, this happens all the time, and I hear from people that do this. They spend hours and hours and hours back testing only to learn that it's a terrible idea. Don't trade it. Well, that's valuable information too. I mean, it's important to know what not to trade, but it sure would be nice to know that without investing hours and hours of time. So a lot of people make the mistake of jumping right into the back testing. The 3-step sniff test is designed to weed out a bunch of stuff that you don't want to pay attention to and only focus on the best. And the idea is we let the cream rise and present itself to us through doing the 3-step sniff test. So the 3-step sniff test, if I go back to the member site, if you go to videos worth watching, look at what the first one is on top. That's probably why you all know what this is, right? You probably already all saw this video, I'm assuming, since no one asked me what it was and doesn't know what it is. Okay. So there's a video for you. It's like 20 minutes or maybe even less. Watch it. But I'll go through it really quick. The 3-step sniff test starts with the first question. There's 2 questions that you ask. Those are the first 2 steps. The first question is, are there enough trades in the session? So when you go back to your framework and that first decision that you made of when you want to trade, and we're going to use that 8:30 to 9:45 example, Central Time, we've decided that's when we want to trade, you would then look at certain charts and markets to see if there's enough trade setups to make it worth your time. And remember, we're going to use Catapult Trader. And Catapult Trader, the trades are real visible. Let's just look at this chart and go to 8:30 so we can see when it starts, which is right here. And you can easily see that there's 1, 2, 3, 4, 5, 6, 7. There's a lot of trades. So that's a quick answer. Now, this is only looking at one day. I recommend you go back and look at 10 or 20 days just quickly with your eyes, and you can determine, yes, there are enough trades, enough setups in a session within the time that you want to trade. It's an easy question to answer, actually. But it's really important because let's say you already have a trade plan and now you want to work on a second trade plan. Let's say you have a good day trade plan and you've determined that even though you have an hour and 15 minutes to trade, you're typically done within 30 minutes. And that gives you a whole nother 45 minutes that you could be trading. So maybe you want a second plan. So now you have to find another market. Are there enough trades? And maybe there's a really good one, but it only gives you one trade a day on average. One trade a day, and some days no trades. Is that enough trades in a session? It might be because it's your second trade plan. Maybe it is if it wins a lot. Maybe you don't mind if there's no trades sometimes and 2 trades, but mostly 1 trade. It might be perfect for a second trade plan. So a lot depends on what you're trying to do. You have to really think hard. You have to know what questions to ask in order to know what answers to seek. But the first question of the 3-step sniff test is, are there enough trades in a session? Simple question. You'd be surprised if some people are like, I think I want to trade this. And they're like, yeah, but there's 1 trade every 10 days. Is that enough? What are you going to do those other 9 days? Just sit and watch paint dry? Watch paint peel off the fence? Right? You're not going to last. So that's why it's an important question. So the second question, though, is kind of related, is are the trades an appropriate size? And what we're looking at is the average trade size over a lot of trades. So I would look at like 20 or 30 trades, and you can write down the risk and average it out. Like we saw, the one was 190. Here's one that's 190. This one is 190. The reason why they're all 190 is because, well, this one's 250, but it's a custom Renko. Usually with range bars, most of the trades are a similar size. But custom Renko is a little different because you have the wicks, which could expand the size. But you can pretty much determine if there are too many trades and the risk is too small, chances are it's too noisy, and you're going to get eaten alive with commission and slippage prices charges. So the trade costs will chew into your profit. And if the trades are too large, well, maybe you don't have enough capital to trade certain markets. Like you might want to trade crude oil, but the trades are too large. It exceeds your 2% risk. So, if you have $10,000 and you want to risk 2%, you could literally risk an average of $200 a trade, right? Well, what if the average size trade is 36 cents? What if it's $360? You don't have enough capital to trade that. So that's not an appropriate size. Now, maybe if you do a micro, then it is. These are things you have to think on. So are there enough trades? Is it an appropriate size? Those are pretty easy questions to answer, actually. And I'll tell you, for most of you right now, the 5 markets I mentioned will fit and will be okay. There will be enough trades with the E-minis and with crude oil. Not if you're using a slow chart. Like if you're trading a 60-minute chart, you can't trade that if you only have an hour and 15 minutes to trade. Even a 5-minute chart. We don't even use time-based charts. You might like it. Maybe a time-based chart is the magic answer. If you remember in the Catapult Extreme boot camp, when Will was showing us some things, he did a test. He was showing us on NinjaTrader that a 45-minute chart was pretty spectacular with the symbol he was looking at. Do you remember? Was it the RTY? I forget. I would have never thought of looking at a 45-minute chart. That's not good for day trading. See, that's not appropriate. That's not an appropriate time. There won't be enough trades in a session, and the risk will probably be too large. That could be a good swing trade. There's a 45-minute chart, you might end up holding those trades till the next day even. You don't know. It's possible. If you hold it overnight, it's a swing trade. If you're in and out the same day, it's a day trade. And the margin requirements are a lot less on a day trade. So you might think you have enough money to trade a full crude oil contract, and you end up holding it overnight. And now you learn you didn't have enough money, and now your broker's giving you a margin call where you have to put more money in your account. You don't want that to happen either. So day trade margins are a lot less, and that's a good thing about day trading. So we get in and out. You want to be out within that hour and 15 minutes anyway, right? Because that's your trade time. So that's the other factor when you're considering if the trades are an appropriate size, if you're going to be able to get in and then get out of that trade with the window of time that you have. I mean, it's a nice problem to have if you get into a trade like one of these, big, huge moving trades where that's why this is called catapult trader, because some trades literally look like they've been flung from a catapult, right? This trade here, you can see the timestamp went from 9:21 and it ends up stopping out at its trailer at 9:37. 16 minutes. That's all it took. But what if you only could trade from 8:30 to 9:30 and you don't know when this is going to finish, or you need to be finished by 9:45 like we said, and here you are and you're still in the trade and it's going up and up and up and up and you've got to leave in 10 minutes. Well, that may not be a problem, but if it is a problem, you just need to figure out what you're going to do. I mean, you can exit, you can just mark it out. But if you see a lot of trades that go too long and finish way beyond what your window of time for trading is, well, that's an indication that the trades are not an appropriate size. Just giving you some, general examples and things to think about. All right, so the third step of the sniff test is the most important one of all, and we call it fast testing. It's a fast test. That's the third step. And what I ultimately want you guys to do is fast test 8 to 12 uniquely different trade plans. And then we're going to choose the one or two that's the very best. That's letting the cream rise. And that's what we're going to focus on, dedicating our time to the more formalized back testing with the UTA spreadsheet. That's another step. That's a little bit further down the line. This is the third step in the 3-step sniff test, is the fast test. And here's the question we're trying to answer. Can we quit our session with a winning result a vast majority of the time while controlling our drawdown with minimal and efficient trading? Now, I know that's a mouthful. It's a long sentence, but you guys need to memorize this because this is the most important thing that we're trying to figure out. This is what economizes our time so that when we do our back testing on the UTA spreadsheet, we're already super excited because we've discovered something that like you're losing sleep now because you've had these epiphanies and you're excited. You've seen the potential. When you start seeing, oh my goodness, this thing's winning like 80% of the sessions and breaking even on a few of them and is losing less than 20% of the sessions. That's like going 4 steps forward, 1 step back. Remember I said if you go 2 steps forward, 1 step back, you can reach your financial dreams. Imagine if you go 4 steps forward, 1 step back. 4 steps forward, 1 step back. That's what we're trying to achieve with our winning sessions. It's not winning trades, it's winning sessions with a very simple trade plan, a very simple set of rules. So when we're fast testing, we need a few things determined so we know what we're testing. We have to know what the market is. So in this case, it's the Russell E-mini or the Russell Micro, whatever. You could even look at the Russell E-mini chart, but then use that to trade E-mini contracts. Those are other things, a lot of little steps you can do. But let's say we're looking at the Russell. That's one of the markets we're fast testing. So we know when you know what it is we're trading, and you know what the strategy is, catapult, and you know what the start time is because we've determined that it's 8:30, and you know what the end time is 9:30, but you can go an extra 15 minutes in case you're in a trade late in the session. So you know all that. Well, what about your goals for the session? Like what goal do you need to reach to give yourself the power of quitting? That's one of the 12 powers of successful trading, is the power of quitting. It's when we hit our goal, we're empowered to quit trading for the day. Our trade plan has done its job. And it could happen in the very first trade, and quite often it will. Now, there are different power of quitting formulas, but when you're fast testing, you want the simplest one. You're either going to trade to target 2. If it's a big enough trade, like maybe crude oil, if you're using crude oil, maybe it's an 8-tick momentum bar or whatever, and target 1, as long as it's 10 ticks or greater, is all you're trying to achieve, the lowest hanging fruit. How could you win a majority of your sessions with minimal and efficient trading? So a typical trade plan might be, well, I'm trading one contract. Target one's got to be 10 ticks or more. If it's less than 10 ticks, I go to the next target. Simple rule. If I hit that goal on the first trade, I'm done. Go to the next session. Fast test, that goes in the win column. Go to the next session. Go to the next. Keep doing it like that. The last thing you need is how many total trades will you allow for? And it could be anywhere from 3 to 5 to fast test. Because what if the first trade loses? Well, you have to take another trade, right? And what if that trade wins, but you're still behind? Still, you're not positive yet. You have to take a third trade. What if the third trade wins and now you're net? Now you're positive. You're done for the session. It's a winning session. Go to the next session, and you're just counting W, L, and BE, winners, losers, break even, and not trades, but sessions. And every time you win a session, there's another one in the win column. So you're just 1, 2, 3, 4 cross, 1, 2, 3, 4 cross. It's chicken scratch counting until you've done like 100 sessions. 120 would be the best. 100 to 120 sessions per fast test. And when you're done with all that, you want to look and see how many you won, how many you lost, how many you broke even. And we're looking for losing 20% or less. That's a simple fast test. It might take you a couple hours to test. When you get really good at it, you'll learn how to do it quicker. But that's how you can test one trade plan. Maybe it takes you 2 or 3 hours versus 2 or 3 weeks if you're using the UTA spreadsheet, right? So spend 2 or 3 hours and do like 8 to 10, maybe 12 different trade plans. Now you're going to be learning a lot as you do this. It's not just this rote, mundane, boring thing. You're going to be like, what do I do in this case? Gee, that was a break even. I need to do another. You're going to have rules that you're going to, and as you see, oh, there's another winning session. Oh, there's another win. There's another 8 winning sessions in a row and then a losing session. And then you get another 12 winning sessions in a row and then you get 3 losers in a row. Then you get a break even. And then you get win, loss, but then a few winners. And if you, anyway, it's random. You learn that random distribution of what it's going to be like. You start getting a sense of what it's going to be like trading a trade plan like that. That's a really important thing to learn. You're not placing one single trade. All you're doing is using your brain. So let's say we're going to fast test this market. You go back to some point in time, go back as far back as the data will let you. If it's a range bar, it'll probably be 90 days. I always put 120 because, it's a Monday through Friday, not the Saturday and Sunday. So I put 120 and let it load as many days as possible. And let's say that this is the day. The first day that we fast test happens to be on this day here, for example. And so you don't want to cheat. You want to think through what happens if you were to show up and start trading at that time. So like, where's 8:30? Well, we have to find 8:30. It's somewhere in here. So there's already a trade in progress. We have to let it finish first. Boy, we wish we were in that trade. Well, if you were trading earlier, if you're starting at 8 o'clock, you might have had that trade, right? But anyway, like this is why we call it catapult. So here, this would be your first trade of the day right there. You had to wait a whole half hour on this day. So at 9 o'clock. So that's the thing that you'll learn how to do when you start practicing your trading live, how to deal with the passing of time. That's another skill that you will acquire, but not in this step. All we're trying to determine in this step is that we can win a vast majority of our sessions while controlling our drawdown with minimal and efficient trading. You see? So you can see, you can mark your chart. You can use hotkeys to get the arrows to go, just click really quick and put the arrows in there. And you can see on the next bar, it triggered into the trade. So like here, you see the setup. It's not a live trade until the price moves up and hits the entry, which it does on the very next bar. So this is the first trade of our fast test. And it comes up and it hit. Are we going to target one in this market? I mean, we could say we are. And it hit target one. So that goes in the win column. Boom. You can look and see what happens next if you want. Gee, not bad, huh? Or you can just quickly go to the next session. Use the fast testing to see and learn and get a feel for, and you'll see the random distribution. And so let me pull up an Evernote. I meant to open this. Let me grab one really quick, and I'll show you how I keep track of my fast test results. Fast test catapult. So when I do a fast test, I use Evernote, but you could use any document, anything you want, but you want to stay very well organized. I always put my trade plan rules. So in this case, start at 820, 4 trades max, or 2 losses, whichever happens first. Adjust stops around lines. So I might make an adjustment. I'll move my stop a little bit below a 50 moving average or whatever lines I'm using to show me support and resistance levels. Need to put all 3 or 4 trades in the UTA. Okay, take profit at target 1 if 20 ticks or more. So this is with the Dowie Mini, by the way. This is not the Russell, but it just gives you an idea. I put my rules. GIS means get in sync. So that means what if you're starting at 8:30, but a trade set up 5 minutes earlier and triggered in, and now it's 8:30. Can you take that earlier trade, or do you wait for a new trade? Getting in sync means you can take the earlier trade if you can grab it at the entry, if it's still at the entry, which oftentimes it will be, and if the trade hasn't gone so far that would have caused you to move your stop to break even, for example. Then it's too late. Then you wait for the next trade. But get in sync, there are rules for getting in sync. And so you can make that part of your trade plan, because how do I know? I mean, what do I know? If a trade started before my start time, it's still a setup. It might be good. I always use get in sync. Some of you may not want to. Some of you might say, I'm just going to wait for the next setup. Both are valid. So look at what this did. I tested a bunch of them, and this is my winning. These are my winners. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 85, 90, 95, 100, and 10, 111 sessions were winning sessions. These were my losing sessions. 5, 10, 15, 23. So 111 winning sessions, 23 losing sessions, and 3 break-even sessions. That's pretty good, isn't it? That's a nice fast test. That has me interested to see if maybe that's a contender. Maybe I want to spend my time and actually build it properly in the UTA spreadsheet. But on the other hand, you might have done another plan that doesn't look so great. And I know I have some of those in here. Maybe not. There's another thing you might try. Let's say that you're flexible. You can trade an hour a day, any time of day. You only want to trade an hour, but it could be at 11 a.m. It could be at 10 a.m. It could be at 9:45. It doesn't matter as long as it's just 1 hour. You just want the best start time. So here's a fast time I did with crude oil. And I did all these at the same time because I'm looking at the chart already anyway. So I tested 15-minute increments. Remember, you have to ask the question in order to know what to answer, and that's what tells you what to test. But you could accomplish so much with a fast test. There's so many things you could answer with this technique. But these are the winning sessions of all these start times. And these are the losing sessions of all those start times. And these are the break evens of all those start times. Interesting, right? But just looking at it really quick, you can see that 9 or 9:30, good choices. 11 o'clock, not bad. Even 12:40, not bad. You could quickly find out a lot of information if you get good at fast testing. The more ideas you fast test, the more you're going to learn. Ultimately, if you fast test 8 to 12 good trade plans, 1 or 2 of them is going to really jump out at you, and you're going to see the numbers. Just how many sessions you can quit with a positive result with minimal trading. That's the question that we're trying to answer. Okay, so that's kind of where you're at, and I could teach you what to do after this, and I'm going to talk about it briefly, but I wanted to spend as much time on these early steps as possible because this is where you're all at right now. Figuring out when you're going to trade, how much money you have to trade, when you don't want to trade, that whole first step. Learning the strategy, Catapult Extreme. Those are the techniques. You'll learn that pretty easy. And then applying that to a simple set of rules to look at a variety of possible trade plan ideas and determine which one will get you to the quickest success with the minimal amount of work. That's backpack trader style. Guys with me so far? Monty says what to do if a trade starts up early. But that's the whole idea of whether you get in sync or not, Monty. Learn the get in sync techniques, and we could talk about that at another session. That's something to bring up during office hours, and I can explain it to you. I don't want to get in the weeds with too much detail today. This I want to be the trade plan hacking framework, and I was hoping to be done in an hour. We're already 25 minutes after that, but this is so important. So I'm just going to now kind of quickly go through the other steps so that you have in your mind what we're doing and what to look forward to. So once you've done your fast testing and you've chosen the one best market, maybe two, let's start with one, then it's time to do a formalized back test with the UTA spreadsheet. Now, I have a lot of training on how to do that. You can look on my YouTube channel. There's a whole play series, a whole video series of all my old UTA trainings from years ago. The training's still very appropriate, even though you could tell that it's dated and it looks old because of what the technology was in those days, but the UTA works the same. It's the most important tool you'll ever use to be a successful trader. In my opinion, regardless of what strategy, that UTA spreadsheet is going to teach you stuff that nothing else can teach you. How to live with the win-loss column, the average distribution of wins and losses, the good, the bad, the ugly, the great, over and over, all the stuff that causes human beings to fail. You're going to flesh all that out and learn how to deal with it while you're using the UTA spreadsheet without risking one penny. That's what that's for. And in the end, you're going to really learn the rules of your trade plan. Where is the best exit? When you're fast testing, you're going with the lowest hanging fruit, that easy target to win quick and move on. But when you do the UTA spreadsheet, you might learn, well, gee, target 3 makes so much more money that you change your trade plan according to what you learn with the UTA spreadsheet. That's where you really tighten it up and get that trade plan right. Are you going to trade multiple positions? Are you going to have a target and a trailer? Or what? There's all kinds of questions that we answer. All right, so that's pretty much what the first 3 steps are, because you can see the proof part, right? Just the fast testing alone goes a long way in proving a lot to you. But where the real proof gets, like, the stamp, the flagpole gets planted into the ground, is what you learn from the UTA spreadsheet. So those are your first 3 steps. So let's say you've done all that. Let's say that you've done all that, you've got your UTA spreadsheet, you've done the work, and you love the results, and you can see the equity curve has gone up and up and up and up, and it's like your forest is growing, 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 and you're ready to start trading. This is the next step. The next step is the practice until perfect step. And you guys have heard me say, well, maybe you haven't, but I'll say it again. There's only 2 legitimate reasons to use a sim account when you're trading, learning how to trade. Some people call it paper trading, right? If you do it for any other reason, it's going to hurt you. So you want to just use it with intention and seriousness, like you want to pretend it's real money. The first thing to do with your sim account is to practice executing trades. Now, you don't have to wait. That could actually happen in these first 3 steps. That's something you could be working on. And that's just learning how to place trades, bracket orders, learning how to place a trade, OCO, where the order, first it's an OSO, order sends order. You get filled on the entry, it sends the target and the stop, and they're attached to each other with what's called an OCO, order cancels order. So when one gets hit, the other one automatically cancels. We call it a bracket order because the targets and the stops are bracketed. One gets hit, the other one cancels. You learn how to place those trades, and you get really good at it. And you learn how to place reversing trades and to cancel them and to replace them. And all the types of different trades, you learn how to do it. You do it over and over and over in a sim account. You don't care if you win or lose. It's not what you're trying to learn. You're just trying to learn how to place trades and cancel trades and place reversing trades and cancel those and get really good at it. That's it. I know someone spent a week, all he did was all day long placing trades until the point where he was so fast and he could do it so well that it was like riding a bike. Now he never had to think of it anymore. And the reason why that's so important is because it's really easy to make mistakes, and mistakes can be really costly. You might have the right trade, you're trading it, you're doing it right, but you hit the buy button instead of the sell button. Oops. You don't want to do that. You want to learn how to execute trades. So that's one of the two reasons that you use a sim account, and you should all be doing that. Once you have TradeStation or your platform of choice set up, start practicing learning how to place trades and cancel them and place reversing trades, etc. Do a lot of them. Okay, so you're really good at it. The second reason to use a sim account is to practice your trade plan. Practice, can you run your trade plan? And this is what the next step is all about. What you want to do, let's say you have your trade plan. You've done all this work to build this trade plan, and now you know what you're going to trade. You know how you're going to trade it. Now you use a sim account to see if you can trade your trade plan trades 25 times in a row without a single mistake. And this is a super important step, and it teaches you more than most people could even handle, because it teaches you first and foremost patience. For example, you can't wait to start trading live. That's why you're here. You want to trade and start making money. And you're now finally you have a trade plan you believe in, and you're going to start practicing it to see if you can do 25 in a row without a mistake, like a CEO running their business, right? And so there you are, day one, and you place that trade and you place it perfectly, and it runs up and it hits its target. Boom, you're done. It took 3 minutes. 3 minutes, you did one trade, and you have 24 more to go without a single mistake. Well, when's the next trade? It's tomorrow. A lot of people have problems with that. I have to wait till tomorrow just to take my second trade, and I got to do 25 in a row without a mistake. Well, if you can't do that in a sim account, what makes you think you're going to be able to do it in a real account? I say, I don't care how long it takes you. That's why this program is 12 months or however long you need, because this is so important to get right. So yeah, you wait. What happens if on the 22nd trade, you're like waiting as the market's so slow, it's yawning you to tears, you're maybe going to half asleep, you got to go in the other room, grab a cup of coffee, and then you set an alert that starts binging that there's a setup, and you run back and you trip and fall and spill your coffee on the keyboard and short out your computer, and now you got to start over again. You made a mistake. You got to get 25 in a row without a single mistake. That's how you graduate to the next step. And the reason why this is so important is something I learned as a musician. As you know, I play drums, and learning a rhythm is kind of hard. Get your hands and feet to be coordinated, and you have to teach your body and your mind and everything. And what I learned over the years is that it takes me time to learn a new rhythm, even today. Brand new rhythms, like learning how to walk again. If my body's doing things it's never done before, you have to teach yourself the coordination of it. If I could play a rhythm 25 times in a row in tempo without a single mistake, without whacking my knuckle on the rim or knocking my eyeball out with the tip of a drumstick or smacking myself in the forehead or a number of other mistakes, if I could do it 25 times in a row without a single mistake, it has now become a part of me. Like I never have to think about it again. I'll never forget it again. And it's like riding a bike. You never forget, right? I'll have it. It'll be just part of my person. I'll be able to do it anytime without thinking. And I want your trading to be like that too. And I want you to be able to run your business like that, because trading's too important to get wrong. You want to be one of the few people that succeed, not one of the many people who fail. And this is how you do it. If you can't run your business like the CEO in the sim account, you're not going to be able to do it live. So the other important concept I want you to realize is to practice how you intend to play. Something I also learned as a musician. I was in a pretty bombastic rock band when I was younger, and I had a friend of mine is a great drummer, and he once said to me, he goes, Troy, if you practice like a wimp, you're going to play like a wimp. If you practice hard, you're going to play hard. Well, it's the same with trading. You want to practice how you intend to truly trade. And so this is why it's so important to get the 25 in a row as the CEO, 25 trade plan trades, running your business for real, but in a sim account. Because if it takes you 6 months, I don't care. By the time you're ready to trade, your chances of success are, because through all this, you're keeping track of your results also. So you've back tested up to a certain point. Now you're forward testing. Now you don't have the benefit of what happened. Now we're just tracking what's going forward now with the plan you have, with the rules that you're following. So you're not only learning how to trade your trade plan like a business, but you're also making sure that the results are staying on track with what you've learned through all that back testing and fast testing. Because trade plans, winning trade plans are not easy to come by. They're actually very hard to come by. That's why they're so valuable. We have great techniques and we have great strategies and we have a lot of good trade plans and ways to get to good trade plans, and you'll create some good ones for yourself. But they're not easy and it takes work, and that's why they're very valuable. If it was so easy, everyone would do it, and then money would be worthless and we'd all be living in utopia, right? So we'd all be singing Kumbaya right about now. Trading's not easy. These steps get you to that place where your chances of success are better than they can ever be if you do this right. So that's the second reason to use a sim account, is to prove you can run your business 25 in a row without a mistake. Now, once you've done that, now you're still in this section here of practice until perfect. Now you've earned the rights of passage. You've done your 25 trade plan trades in a row, finished that finally, however long it took you, and now you've earned the rights of passage to start trading real money. But you're only joining the JV team. You have to get to the varsity team to trade your full risk, which is your full 2% or whatever that percentage you decide is going to be your risk. We'll just say 2% for the sake of this model, okay? But you're not ready for that yet. When you finally get your 25 in a row in a sim account without a mistake, now you're going to do another 25 in a row without a mistake, but this time with real money. But it's going to be the smallest possible position that you could trade. So if it's a micro, it's going to be one contract only. Can you trade 25 in a row without a single mistake? If you make a mistake on the 17th trade, you start again at 0, just like before. By the time you get to the end and you've done another 25 in a row with real money, even though small, but real money still, real money is not the same as sim trading. It's not just psychologically different, but the way the trades execute also. They try to simulate it in a sim account, but that's not how real trades actually get executed. You're going to learn that when you finally go to real money. That's the last part of this training before you go to your full risk, of course. You get to that second set of 25 in a row. So now you've done 50 in a row without a single mistake. One block of 25 and another block of 25 with real money. But once you've done that, you're basically at, you're graduating. You're becoming now. You've earned the right to start trading your full risk. Your 2%. You're now running your business like a CEO, basically. You've opened your doors to the public. That's the framework. And then once you've done that, you have something that you could use as a model to duplicate And for the rest of your life, that model will serve you well because you may change, your life may change, you may move, you might decide to trade at a different time for whatever reason. Things change, you have to redevelop and reestablish a new trade plan. You have a model now on how to do it. Now, if you think about it from the business CEO point of view, all businesses take time to establish, right? You're not going to just start a business and a week later you're making money. You have to do all the preliminary stuff and get it to a certain point where it finally starts becoming profitable, and most businesses fail. Think about it. We're treating this like a business too, and we have that same idea. If this were a dry cleaner instead of a trading business, you'd have to do all the preliminary stuff, find the store, develop a market, get people to know about you, probably stay open for a few months without very many customers coming in, you know, little by little, word of mouth, building it up, getting to the point where you can run it. You know that you have your standard operating procedures. You have to train your employees, all this stuff you have to do to get it to where it becomes a successful business. It might not be till the second or third year that it starts making money. This will happen sooner than that, but the idea is you have to think like a CEO, not like some person trying to trade. You see, there's a big difference. But this is the steps you take. This is that second track of learning, the trade plan hacking framework. And the whole trade plan hacking is some of the early steps where you're learning the strategy and you've got your set of rules and you're proving that it's going to win most of the time. All this stuff is so valuable for you because when you believe in it, then when that trade sets up on the right edge of the chart, you won't have a psychological attachment to the outcome of that trade. That's the goal. Because that's the trap that most traders fall into, is that they're psychologically attached to the outcome. If it has to win, it has to win. And if it loses, it feels like you're getting kicked in the stomach. You don't want any of those feelings. You don't want to respond like that at all. You don't want to have that. You want to be immune to that. You want to be from above the forest, right? If you're starting to feel that sick to your stomach feeling when you're in a trade, then that's the indicator that you have to pay attention to. So if you remember, I said that you are your number one indicator, not the lines on the chart, not the dots. It's you. Because there's the thing you know that you should be doing, and then there's the thing you actually do. And if they don't match up, then that tells you what it is you need to work on. And you need to go back a step or two. So if you're uncomfortable when you place a trade, well, first of all, is it a sim account and you're still uncomfortable? Well, that's fine. You live there for a while. If it's real money and you're uncomfortable, you might be over trading. You're not ready. Like if you don't believe in what you're doing, you're going to fail. And if you do believe in what you're doing, you're not going to have that hardship, that psychological hardship of worrying once you get into a trade, because you're going to realize it's the sequence of all the trades that make you money. It's not just whether one trade wins or loses. But if that you're still sweating over one trade winning or losing, you got to go back. You went too fast. You haven't acquired the belief you need. That foundation of belief is the difference maker of whether you will succeed or fail. You could find a good trade plan. We're going to do that. We got all sorts of great trade plans. You're going to discover them on your own, which is part of your belief, building that belief. There's a reason why I want you to do the work. But in the end, you have to pay attention to you, and that the things you do are congruent with the things that you know and think and believe. We're all smart enough to go, yeah, this all makes sense. We all have that intellectual capability to go, yeah, this is good. But there's a lot different than how you feel psychologically when you're in the trenches actually trading. And you've got the trade and you're placing it, and maybe the last 2 days we're losing sessions, and here you are in the third session, and that first trade starts going against you right away. If you didn't do the work properly, it's going to really you're going to take a big hit on your confidence because you don't believe in it enough. You might end up pulling the trigger or doing something you shouldn't do, and then the trade turns around and goes on and wins big, and you got out of the trade because you're like, this isn't working, when actually it is. Like, it's so important that you go through these steps. It really is. Trade plans work in mysterious ways. Maybe the first 2 trades losing is the best thing that ever happened to you, because if you hit your goals with the first trade, great. But in this case, the 2 trades lost, you have to take a third trade maybe, and then that runs up on this huge profit that you would have never got if the first 2 trades didn't lose. These are things you'll learn. That's why it's so important you go through this process properly. All right, so all I'm going to say about the rest is that at some point you may decide that you want to add swing trading. You may decide you want it as second trade plan. You're going to have a model to follow. We build the swing trades in much the same way. We're going to fast test, but fast test is not counting winning and losing sessions. It's just counting winning and losing trades. It's really easy, actually. And we can use automation for the fast testing with swing trading. We're still going to look at the charts and make sure that the trades look right and stuff, but we'll use automation and we'll use other tools to help us economize our time further. And we could use automation even when we're trying to figure out some of the day trade plans too. Because it's the combination of our own brains and our eyes, and the 3-step sniff test, for example. But you may want to use automation to get even closer, because certain things, like you may not know what should the entry be, 2 ticks beyond the setup bar, or maybe it should be 3 ticks or 6 ticks. You don't know until you could run automation and get some clues like that. Or where should the stop be? Should the stop be 1 tick on the other side of the setup bar? Maybe it should be 3 ticks. Maybe it should be 7 ticks. You can run automation and get some good answers. Or when do you move your stop to break even? Like, have you gone a certain distance and then you move the stop to break even? When? Well, there's a certain default that works pretty well, but for this particular idea you're testing, there may be a better input or better time when you move your stop to break even, or when you start trailing, etc. That's why we did that advanced boot camp the other day. But that's when we start using tools like the automation. So let me ask all of you in here today, who here has not learned the Catapult Trader yet? Has anybody? I know some of you haven't, but I just want to know. Who doesn't know the Catapult Trader, how it works? Okay, good. So obviously all 3 of you are new. It's to be expected. So I'm going to tell you what you could do. If you go back to the portal, and you log into Catapult Extreme, obviously you're going to want to put the indicators on your chart. So when you get TradeStation or NinjaTrader set up, you're going to install the indicators. We can help you if you need help. There's simple instructions. It's really easy to do. Then go to training docs and videos and watch the boot camp that we just did a few weeks ago on the Catapult Extreme. There's 4 videos, and you can learn the Catapult right there for you. Once you've done that, we'll also start drilling down and learning it as a group in our training here in the mastermind, and you'll have that as well. There's also Catapult videos on my YouTube channel. You can literally go to the YouTube channel. Let me pull it up and I'll show you what I mean. You get to the YouTube channel, Backpack Trader. You should all be subscribed to the channel. But you can, right here, type in Catapult. Remember, Catapult came out when COVID happened. So it's been a few years, and there's been various boot camps. And you could see a bunch of stuff about, here's the ES. There's a bunch of stuff on Catapult Energies. Here's the M2K. We were just looking at that. You can see some live trades that I did. There's some live trades. Catapult Energies is unleaded gas. There's a bunch of good videos on here, so you can learn all you want about. Here's Catapult and the Russell, Catapult Equities. Lots of catapults on here. Answers the big questions. That's all with the automation. Trade Assist. There's a lot of good videos in my YouTube channel, so you guys can just have fun. And there's some live trading in here too. I did some live trading with Catapult. I don't know why they didn't show up, but they're in there. Let's see. Live. Well, that's my trade room. That's not what I meant. Live trading. A lot of trade room replays. I would probably just avoid those because you probably get bored with those. Just find the other videos. I mean, watching a live trade room session, seeing it, I don't know. For me, it would bore me to tears, but maybe because I've done it for 18 years. Live trading the micro E-mini futures with Catapult Trader. That's when the Catapult first came out with the ES. There's some other ones. Here's yeah, I'll just let you go through it. I guess most of these are the trade room replays, but there's a bunch in here. And then if you go to playlists, you'll find the UTA somewhere in here are the UTA here, right here. Here's the UTA, the full playlist. And there's a lot of all the counterpunch trader training videos are here on this channel. They're not in the member site. They're actually on the YouTube channel. So if you want to learn counterpunch trader, here's the counterpunch trading full playlist. And there, it's one after the other. There's a whole bunch of them. So that's all these, see? A bunch of them. So there's so much for you guys to do. I don't know. I don't want you to get overwhelmed. But if you're learning Catapult, just focus on that, beginning with what I showed you on the member site, the boot camp. And then here is the trade assist automation. This is what the indicators you want to download actually. Don't download these indicators, download these, the TA installation, because that will give you the indicators and the automation. So you can just download it from here. You don't have to download it in both places. You can get the UTA spreadsheet right here. It's on all the member sites, but there it is. And there's some trade plans and different things. But start learning Catapult. You get ahead of the curve a little bit because that's what we're jumping into as a group together. So if you go through that boot camp, the sooner the better, because then when we start doing these live trainings going forward, I'll review it all. I'll teach it to you again, but in a more fast pace, and we'll get into a lot of the nuances and stuff. And by then you'll have a really good understanding. Catapult Trader is really easy. It's just one trade setup, super easy to learn. It's then learning how to apply it to win with it. That's basically what we spent today's session on, discussing the trade plan hacking framework. Okay, so I don't want to overwhelm you with too much. I think I've given you guys a lot. We're almost 2 hours into this session. Not sure what more I could tell you that's going to be helpful. This isn't going to spill over the toppeth of the cuppeth, so don't want the cuppeth to runneth overeth too mucheth. I think you guys got a good full tall glass to drink down and digest now. But hopefully you guys understand the importance of staying on track with that framework. Use it as a blueprint or a roadmap to follow. Don't go too fast. Stay on the step you're on until you've completely, not only have you finished it, but you understand it, you've absorbed it, you own it, and you have something to judge yourself by. Meaning that the actions that you do are congruent with the things you've learned on the step that you're on that framework. Super important. All right, so what do you think? Any other questions? Anything else on your mind? Monty, what's up?
One quick one. Thanks to Troy, we got 5 or 6 places where we can start that are going to give us 75 to 80% accuracy. The one thing that can mess that up is if we don't do all the steps, especially in the simulation 25, because the only way those numbers will go down historically is something we do. And that's a hard one to learn. But when he says 25, he didn't say 24.
Good. I'm glad you said that.
Bye
That's
bye.
true. That magic 25. Remember what I said about learning a rhythm. And the other thing is that what you're going to learn when you go through this is that there may be a period of time where it doesn't feel like you're making much traction. there are periods of time where a winning trade plan doesn't feel like it's doing very much. And that's when most people quit. And it's usually right before the explosion of the next growth spurt. And so that's why it's so important to go through this process too, because you're in it long enough to witness the various periods and cycles and things that you go through with your trade plan. A trade plan typically won't go just straight up, although we actually have found some that have. But mostly, right when you start trading, when it's done going straight up, is when it starts going down a bit, and then you're going to quit right before it then zooms straight up again. So that's what we want to avoid. So it's good to experience the ebb and flow and the random distribution of wins and losses, even through those periods of time when it doesn't feel like you're making much progress. Especially starting out when you have one position, one contract, it's hard to grow your account very fast. You hit that exponential curve and start zooming after the first, second year when you're trading multiple positions, because then the velocity of growth just goes faster and faster and faster. The more you win with the larger size, the faster you grow to another larger size, because right? It's that rate of change is exponential also. So that's stuff you learn through this process. We didn't talk about money management. We didn't talk about what we're going to learn with the UTA spreadsheet when you get to that step. We will spend time with that. But you guys do have the training videos. You can jump ahead if you want. Learn at your own pace. You don't have to rush. The market's not going anywhere. Don't pressure yourself. It's really important that you live your life. You focus on what's important. Have a well-balanced life. Handle your family, handle your business, handle the things you have to do. Give your trading what it needs, but keep it separate from what your personal needs are. Attend to your personal needs, but give your trading what it needs and keep it separate. At some point, your trading will take care of your personal needs, but you have to give it the chance to get there. Good? Just reading some of these comments. Yeah, I'm glad. I'm hoping that this nighttime session was good for some of you that wouldn't have been able to make it earlier. It's hard for me to do these late night sessions because I'm on the West Coast. My day starts at like 5, 6 a.m. I've been sitting at my desk now for like 13 hours. It's too long. I mean, no, that's not true. I did go and take a shower and do what human beings do. I actually ate lunch and all that, but you know what I mean? It's a long day. I rather do these earlier. I will do them later like this if it helps you guys. I'll try to do some more at this time. You guys need to give me feedback and let me know. Try to do sessions when you can make it. I know there's some that you won't be able to, so catch the replays. Do I need to show you? You know where the replays are. I did forget to say one more thing, is that when you're looking at the replay archives, watch the getting started session. This is the first getting started session when we first started the mastermind. You should watch that. You should watch the welcome parties. This particular session today, it's a beginner training, but I'm thinking of putting it in the getting started because this is such an important topic that we covered today. I want to be able to easily find it. I might put it in the getting started section. But you want to go through and watch those early on getting started, because there's probably stuff I didn't tell you today that you need to know. So anyway, everyone have a wonderful day. Thanks for evening. Thanks for joining me. I hope it was beneficial for all of you. We do have a schedule this week. I did not send out a reminder video email like I typically do. I've just been so busy I forgot. So if you're not on the Discord channel, I might as well take the time to mention this to you. Get on the Discord channel. First, you got to join our trade hacking club. If you haven't done so and you need the link, ask me, but it's also in the welcome sitting on the porch, I think. Join trade hacking club. Yeah. Join it and then send an email to Kong, and that's also in here I think it's in welcome. In the welcome, it's in here. Yeah, right here. Join. Here's the link and send the email. Get in Discord because this is where I'm putting the schedule in the announcements only. I'm putting it in here. Okay, so that's what you guys got to get in the habit of checking that. We usually do the Tuesdays from 12 to 1, but actually Romulus is doing it tomorrow from 11 to 1. He's doing a 2-hour session, a beginner and then a office hours. Did I put that in here? I don't remember. I will add it. And then we'll get Jesus Nava rescheduled for the trade station training. We'll get that happening once he's feeling better. Diane says Discord is better than an email. Then you don't have to worry about email congestion. Yeah, and also it's just more little things for me to do that take time, and I keep running out of time, and the stuff I have to do keeps growing. So I'm trying to economize that, not only for you guys but for me as well. So there will be a session tomorrow, 11 a.m. Eastern, and then we'll do a training on Thursday as well, 11 a.m. And that's where I'll start getting. I think we'll start in looking at Catapult Extreme. I'll start redoing the training with you guys on that. Okay, sound good? All right. Bye, everyone.